And then there's Nvidia, the darling of Nvidia. I read earlier that Jensen Huang was offered a CEO role back in, I think it was 2013, to be CEO of something else. Maybe it was 2013 or 2016, but didn't take it. Good thing for him. Right now, we saw the stock up 180% this year, came off the highs of 152 recently. Some of your thoughts on where this could be headed?
Yeah, I think the stock is going to probably pull back at some point, but not a serious pullback. It's along the lines where plenty of gas in the tank right now, moving right along, but maybe it hits some traffic and it's stop and start, but continuing on the positive trend. This is a stock that has become not only a darling, but it's a real play here. I think that, versus of the dreams of being in another place that didn't make as much sense, everybody's kind of hopped on the bandwagon, and It's making decent money as we go along.
So you still like it?
Yeah,
right?
We're going to make probably double-digit, 15 to 20% in 18 months.
Wow,
we also think that this stock is going to be, there's talk that this stock is going to hit new highs. We already see that happening, but we believe it's going to continue to happen now through January. So we may have to go back now, like I did on a few stocks this year, and say, hey, we need to revise our upward price targets.
For the third quarter of fiscal 2025, which concluded on October 27, 2024, Nvidia announced an outstanding performance, with revenue and earnings rising 94% and 109% year-over-year, respectively. Driven by broad-based performance across sectors, the company reported revenue of $35.1 billion, well ahead of its projection of $32.5 billion. It should come as no surprise that the company's primary growth engine was the data center segment driven by artificial intelligence, AI, which saw revenue increase 112% year-over-year to $30.8 billion. Following the announcement of the report, Nvidia's share price experienced a modest decline, despite the company's impressive financial performance. Investors seem to have anticipated a better outcome and were disappointed. It was challenging for Nvidia to exceed market expectations due to the heightened buzz surrounding the business throughout the previous 2 years. But there's a chance that the market sentiment will soon improve. On January 6, CEO Jensen Huang will give the opening keynote address at the 2025 Consumer Electronics Show, CES. Next-generation graphics processing units, GPUs, including the RTX 5080 and RTX 5090, are anticipated to be released by Nvidia in this market. Share prices could rise significantly in the upcoming months, as significant announcements are expected in early January 2025. Nvidia has established itself as a top provider of AI infrastructure at the data center scale. The installed base of data center infrastructure, valued at around $1 trillion, needs to be modernized as GPU-based machine learning and neural network techniques gradually replace CPU-based coding. AI factories, a new AI-based sector that requires tens of thousands of GPUs and generates a wide spectrum of digital intelligence, have also emerged as a result of the growing usage of generative AI technologies. Nvidia anticipates that the AI factory sector will grow to be worth several trillions of dollars. For Nvidia's AI-optimized hardware and software products, all of these trends are encouraging. Consequently, there is still a strong demand for Nvidia's Hopper architecture GPUs. Major cloud service providers including Amazon Web Services, Microsoft Azure, and CoreWeave have led to the quickest product ramp-up in Nvidia's history for the H200 GPU, the successor to the highly successful H100 GPU. The third quarter ended with H200 sales in the double-digit billions. Another significant growth driver anticipated in 2025 is Nvidia's next-generation Blackwell architecture systems, which are full-scale, full-infrastructure, AI data center scale systems with configurable configurations. In the third quarter, the business supplied 13,000 GPU samples to clients. Since there is a much greater demand for Blackwell than there is supply, Nvidia will keep charging higher prices for these products. Because of its extensive installed base of AI-optimized GPUs and strong software ecosystem, Nvidia has also become the largest inference company in the world, With the use of software frameworks, libraries, and algorithms, the same hardware that was previously utilized for training foundational models is now being employed for inferencing. As a preferred inferencing platform for businesses creating, developing, and implementing AI agents and copilots, Nvidia is witnessing strong demand for its cloud-native enterprise AI software suite services. Nvidia NVDA microservices, a component of the Nvidia Enterprise Software Suite, are currently being used by more than 1,000 businesses. Enterprise AI will present Nvidia with a significant growth potential, as billions of AI-powered agents are anticipated to be deployed in the upcoming years. Furthermore, continuing developments and the growing use of industrial AI and robotics will be very beneficial to Nvidia's Omniverse platform. In the third quarter, Nvidia's networking division saw a 20% year-over-year increase in revenue. One of the main drivers for Nvidia has been the high demand from cloud service providers and supercomputing centers for InfiniBand and Ethernet switches, smart NICs, and Bluefield DPUs to power their AI-optimized GPUs. The majority of analysts are upbeat about this soaring AI stock. The median target price for the 67 analysts that follow Nvidia stock is $175, which indicates a 26.6% increase. The price-to-earnings, P/E, ratio of 54.4 that Nvidia is presently trading at is significantly lower than its 5-year average P/E multiple of 75.8. The price/earnings to growth, PEG, ratio of 0.23, which is the company's growth-adjusted P/E ratio, is likewise rather affordable. All of this indicates that Wall Street is quite optimistic about the stock and believes it has a lot of room to grow. With a market valuation of $826.7 billion by 2030, Nvidia is the clear leader in the global AI business and has superior pricing power over its rivals. Given its healthy financial growth trajectory, extensive hardware and software acceptance, big installed base, and strong technological moat, it could be prudent for savvy investors to acquire a minority stake in the company before its share price catalyst in early January 2025. So, what implications does this have for Nvidia's stock? Let's explore that. But first, a big thank you to those of you who've stuck with us this far. Creating these videos takes significant effort and dedication. So if you're enjoying the content, please hit the like button, subscribe to our channel, and share your thoughts on Nvidia stock in the comments. Your support truly helps us grow. Now let's get back to the video.
I don't think anybody would have expected this year that we saw with the new highs. Even November that came in as the best month of the year, just finishing so strong here. Let's see the Nvidia chart, please. Rick Ducat, what stands out to you? Because he's seeing 15 to 20% upside potential here for new highs.
Oh, sure. Well, I mean, anything could happen with a stock like this. It's such a large part of the market. It's so big and so important here. And when we do look at the chart, though, a little bit of a slowdown recently. Once again, kind of we had a ascending triangle type shape here, much like our Apple chart. Not exactly the same, but once again, kind of exhibiting more of a resistance zone here. You can see we kind of had these highs kind of between our light green and dark green lines, 130 to 135. Coincidentally, just being, nice even $5 increments once again here. More recently, though, is where perhaps some cracks are starting to show because we have our rising wedge shape between our two blue dashed lines here. We topped out around this area. Notice that we saw bearish divergence on the RSI. Price was making new closing highs around this period here, but not really following suit with the RSI. RSI was actually trending downward a little bit there. So a situation where we're losing steam in terms of momentum, not really what you want to see, but also, we've had such a rally, such a run here. Nothing goes up forever. A bit of consolidation might make.
Thanks to its breakthroughs, Nvidia has grabbed the lead in the rapidly expanding artificial intelligence, AI, business. The company manufactures the fastest graphics processing units, GPUs, in the world, which are essential for some of the most important AI operations like model training and inferencing. In addition, Nvidia has developed a whole range of AI services and products to help clients on their AI journey. Nvidia has had triple-digit earnings growth for numerous quarters as a result of this AI concentration, and its share price has increased 2,400% in the last 5 years. The largest tech firms in the world, such as Alphabet and Meta Platforms, are among Nvidia's clients. These companies are making significant investments in AI and depend on Nvidia to help them establish themselves in this emerging field. Despite all, there is one specific risk that Nvidia must deal with today. In fact, Nvidia might lose the majority of its revenue if this issue worsens. Here's some good news, though. Alphabet CEO Sundar Pichai's recent remarks might allay our concerns about this issue. Let's investigate further. Let's first discuss Nvidia's current market position in more detail. Because of the superior performance of its GPUs, the business commands 80% of the market for AI chips. Nvidia wants to maintain this position by releasing new processors every year. It should be able to sustain its advantage because its GPUs already surpass competitors' chips thanks to this focus on consistent innovation. Sales of Nvidia's freshly released H200 chip quickly reached double-digit billions during the company's fastest production ramp ever. This GPU can reduce clients' total cost of ownership by up to 50% and provides inference performance that is twice as fast as its predecessor. In addition, Nvidia is introducing its Blackwell architecture and chip this year, a revolutionary platform that the company claims is experiencing staggering demand. Despite all of this achievement, there is a significant risk that some of Nvidia's biggest clients won't be able to depend on the leading chip designer in the future. Businesses like Amazon, Meta, and Alphabet have created and are still refining their own chips. In fact, Alphabet has been using its proprietary Trillium processor for 6 generations, and the company even said on the most recent earnings call that the chip keeps producing ever better performance. The issue for Nvidia is that these businesses might eventually start using their own goods instead of purchasing as many of Nvidia's. However, Pichai's remarks imply that this is unlikely to be the case and that these chips may instead remain complementary. According to Pichai, we have a complete set of solutions. All of the top AI accelerators are here, and we're funding them all. These statements imply that Alphabet is only looking to provide Google Cloud users with a wide selection of options rather than trying to replace Nvidia's GPUs. Similar to this, Amazon's AWS sells its own less expensive GPUs to consumers on a budget while maintaining access to Nvidia's high-end goods. It's also crucial to remember that Nvidia has such a significant technological lead in GPUs that it would be very challenging for one of these companies to create an internal chip that can match Nvidia's most recent model, particularly in light of Nvidia's strong emphasis on innovation. Additionally, businesses like Meta, which trained their big language models on GPUs, are likely to keep investing in the best chip available since they want to win this AI race. This does not preclude competitors from achieving success in the market for AI chips. There is enough of business for a number of competitors in the general AI sector, which is expected to grow from $200 billion now to $1 trillion by the end of the decade. However, investors shouldn't be concerned about Nvidia losing business in the years to come given the company's leadership, attempts to stay at the top, and these recent remarks from Alphabet. The good news for long-term investors in this AI powerhouse is that Nvidia's main clients are probably going to be around for a while. To stay informed about the latest developments from Nvidia and the ever-changing stock market, consider subscribing to our investing tutorial channel. We provide daily updates on significant market shifts and key catalysts, so hit that subscribe button to ensure you never miss crucial information. We'd love to hear your thoughts on Nvidia stock, so please share your opinions in the comments below. Now let's dive into today's video.
So a situation where we're losing steam in terms of momentum, not really what you want to see, but also, we've had such a rally, such a run here. Nothing goes up forever. A bit of consolidation might make sense at this point here. But you can see we held the line at our support zone, which also contains our orange 63-day exponential moving average around 134 or so. Now, I'm kind of wondering, it almost looks prime for a breakout. Look here, because we held on to our green trend line. We are below the 50 midline on the RSI, but we are very close to crossing above both the 50 midline once again and that short-term downward sloping steeper red trend line, as well as our yellow 21-day EMA. So we could get a push to the upside if we start to break through those things. If we were to look at our support and resistance here, we can see our blue linear regression line, our yearly line of best fit, 148.92, so about 149, the +1 channel, +1 from that area, one standard deviation, 178.60, that could be one area to watch in the shorter term. Then we've got our support zone between 131 and 135 to keep an eye on.
Ken Fisher founded Fisher Asset Management, a financial advising firm, about 50 years ago. The company manages more than 150,000 private investors and more than $240 billion. The aforementioned 7 equities make up a sizable portion of Ken Fisher's portfolio because he believes they are well positioned to continue outperforming the market as a whole. Fisher predicts that despite the current state of the economy, growth equities will continue to beat value stocks. You should anticipate that the wonderful 7 will continue to do well if you believe that the market is rising. Will they always do better than everyone else? No, but in reality, they never did. In actuality, they performed better collectively than the majority of groups you could discover. In an interview, Fisher stated, "I am optimistic on the market as a whole moving forward, so I think that will continue to be the case." In the midst of the artificial intelligence revolution, Nvidia is among the top 15 stocks that billionaire Ken Fisher has selected for 2025. The business is well known for creating some of the most in-demand graphics processing units, GPU. Because they are used to fuel AI models, GPUs are in high demand. Due to high demand for AI, Nvidia recorded record revenue of $35.1 billion in its third quarter, a 94% year-over-year gain. It now anticipates a 70% increase in revenue to $37.5 billion in the fourth quarter. Additionally, it anticipates that revenue growth in 2025 will be fueled by the new Blackwell architecture. With 88% of the graphics card market, Nvidia Corporation is performing well in the data center chip and gaming graphics card markets. The stock has increased 187% this year due to record revenue and earnings brought forth by strong GPU demand. In order to prepare for the future of artificial intelligence, Nvidia is investing its excess revenue in businesses such as SoundHound and Applied Digital. Additionally, it holds sizable shares in Applied Digital, a developing data center designer and builder. Nvidia is making these expenditures as part of its efforts to protect its future in the face of the AI revolution. Although we see Nvidia's potential as an investment, we are convinced other AI stocks have a better chance of producing larger returns in a shorter amount of time. As always, sharing your thoughts and insights in the comments section can foster a more informed community discussion, helping everyone navigate the complexities of investing in this dynamic sector. Stay ahead of the game with the latest stock market news, data, and important updates. I share valuable insights and real-time information on my Telegram channel, ensuring you're always informed before everyone else. If you want to keep up with the fast-paced world of investing, open the description below, click the link to my Telegram channel, and join our growing community.